evening and welcome to the weekend edition. My name is Peter Resnick from ShadowTrader.net. I am so excited to be doing this week's show with you, finally in the new space with the big screen. You're going to absolutely love the charts and the graphics and the way they look here. It is really gorgeous. We got a lot to talk about this week. I purposely titled this video, Should You Buy This Market? Now, the obvious reason is, of course, the big reversal bar that everybody saw on Friday, today the 7th, big hammer. I get it, but we're going to get a little bit deeper than that. I'm going to show you a lot of reasons why I do think this market should be bought, but almost none of them have to do with the reversal bar on Friday, all right? So lots of charts to share with you. More charts, less talk. Let's do it. Time to look back a little bit before we start to look forward and do our little week in review. This is where we look at basically what happened in the markets, but especially a little bit under the hood, 11 sectors, gold, oil, Bitcoin, etc. This is a little new segment here that I'm debuting with the start of this new show that I hope you like. Some of you may have already seen this last week before we moved to new space, but basically I call this ruling reasons. And those of you who are fans of James Dalton, I of course am, my mentor in the market profile, he talked about ruling reasons, which are essentially what's happening in the market, what's driving things. It could be something as simple as like they need to get it higher into the end of the month or whatever. So what I thought we'd do with this ruling reasons each week is break it down a little bit just to give a little bit of color to the price action of what was happening during the week. So anyway, on Tuesday, we had the news from Palantir. They beat, but there was all this question about valuation. And this is really, really important because this is essentially probably the whole ruling reason of the entire decline all week is the fact that the market feels that AI valuations are stretched. So they actually beat on earnings and estimates, et cetera, but the stock went down. NDX was down 2% that day, but market was very rotational. I purposely wrote XLF and XLV. As the money was coming out of tech, it was going into financials and healthcare. Keep that in mind because we're going to get back to that in a moment. Wednesday, we had an overnight lower and then a huge reversal. If you recall, if you're watching the charts closely like I do, huge overnight action taking it much lower, but we then opened much, much higher. AMD beat, gap down anyway, and then we had an ADP jobs report that showed very, very weak growth in payrolls. And this is important as well because that's really the other ruling reason. There's basically two major factors going on in the market right now. Is the AI trade frothy? And B, is the labor market softening to the point that it's going to be a problem economically? All right, Thursday we had AI stocks taking tech down about 2%, and the Tesla board voted yes on the $1 trillion pay package for Elon Musk. If that's not a sign of the end times, frankly, I don't know what is. All right, let's take a look at this graphic right here. This is how all those ruling reasons played out over the course of the week. Monday's open to Friday's close only. No weekend gaps here. I'm not interested in that. Just the tradable activity. First off, a little caveat before I get into this. Just want to be really clear. Numbers over here are not correct. Did not update the numbers, but the percentages are right. Also on the right-hand side of your screen, you'll notice that's not TLT and the yield and the VIX, and gold was not at 38.09, etc. So numbers are wrong, but percentages are right. So just keep that in mind. One of the things that I want to focus on in this chart right here, right off the bat, because the entire theme of this show is should you buy this market, and reason being the divergence that was happening in the markets as the market was coming down. This was a very rotational market all week, and I've got plenty of data to back that up. This was not a market where the baby was being thrown out with the bathwater, not by any means. There was all the money coming out of technology was going somewhere else. Remember, this entire week was about nothing more than the fact that is the AI trade frothy, and does some of that hot money need to come out? And I'm telling you that it was going into other places. Like, look closely right here. At the end of the week, tech stocks, XLK, down over 5%, but at the same time, financials gained almost 1%. Same thing with healthcare, 1.25%. And these two sectors are very heavily weighted in the S&P. This is a lot of the market. Discretionary got hit, industrials, communications also as well. But look at this side over here. Doesn't make up too much of the market because they're lower weight, but staples, energy, and utilities altogether, a decent amount, say 11, 12% of the market. Staples about 7 or 8 or 6, around there, and energy and utilities probably 5% altogether, right? Materials down a little bit, real estate up slightly. And again, on this right-hand side, again, caveat, The actual numbers are not correct. I did not have those updated, but the percentages are correct. So you can see bonds and yields about flat. VIX popped up a little bit, not doing too much because of that huge Friday reversal. Obviously, it came in a bit. Gold has been holding its own. Again, the number is not correct, but the 4,000 level here has been very, very sticky. I personally right now am flat gold. Gold has been very good to me all year long. I am waiting for that consolidation to stretch out more. The more time that we can spend at 4,000, which is, in market profile terms, value, as we know, right? Because value equals price plus time. So the more time we could spend at that 4,000, the more strong that sort of foundation is going to be to lift it up to get another rally going, all right? Bitcoin was also down quite a bit again, not at 110, actually went to 100, down about 6% on the week. Multiple tests of the 100,000 level this week, and all of them failed. On the charts that I was looking at, I think 3 times out of 4 candles, we breached the 100, didn't find any new sellers. So that 100,000 on Bitcoin does seem to be the floor. All right, let's get a little bit deeper here. I want to get under the hood here and keep talking about this theme of sector rotation this week. What I've done here is I took snapshots of market internals on key days this week when the market was either down or up. So specifically what you're looking at here is Tuesday, November 4th, Thursday, November 6th, and over there is Friday, November 7th. Let me explain what we're looking at here. This is a market internal screen that I have on a portrait monitor in my setup. So I'm always looking at it the long way this way. And what I've got on the top here is basically a 30-minute chart of the S&P. That's not that important, but most importantly, these boxes here, which are all of those 11 sectors that we just talked about in the prior graphic, starting with technology, going all the way down to real estate, utilities, etc. That is the percentage gain or loss from the open. All of these pictures were taken at the end of those days, and I've annotated what the S&P did those particular days. So for instance, Tuesday 11/4, the S&P was down 1.2%. The NASDAQ was obviously down a lot more than that. But look at how the sectors fared. And again, I must remind you, from the open. This is not measured from Monday's close to Tuesday's close, like traditionally. This is all from the open, which is what makes it so valuable. And look at the relationship once again. Technology down heavy, almost 1% on the day, and look at financials, up almost 1% on the day. And this was the theme basically all week long. Same thing on Thursday, 11/6. Look at the percentage, S&P down 1%, but look at the mix up here. Technology down almost 2% that day, but financials down 17 basis points, right near their open. They barely moved at the end of the day. Healthcare and energy were strong, and Friday was the big turnaround day. And look at how strongly everything closed. And again, remember, this is measuring from the open. Financials, again, up 91 basis, utilities, real estate, industrials, almost everything green. Weighted AD, worth its weight in gold. I always talk about this. This is a proprietary indicator that we have at ShadowTrader.net. Probably the best thing I've ever done, literally, in the trading space. This thing just works so well. Notice how you have the gap down and rally. And at first you sell off on Friday, and look at how perfectly the weighted AD tracks and then gets positive about 2 in the afternoon, and then boom, it's like off to the races. So really, really powerful signals there from weighted AD. You can check that out in the description to the video below. Okay, chart time, S&P, NASDAQ, and also going to talk about the Russell today, which I don't talk about all that much. I'm not really a big IWM trader myself, but something happened in the Russell that is noteworthy. Let's go to the charts. Start with the S&P daily, of course. Big reversal bar on Friday. Most important thing really about this chart, as with any chart, is trend. Look at the trend line here, holding, holding, holding. Friday we get a break of trend, and yet close way above. So call it a fake out, call it an undercut, whatever you will, but trend line was lost in the S&P but regained and closed strong. Looking ahead, most important thing now, shift your focus to the downtrend line. Very simple, right? The same way that you can connect bottoms and go this way, when the market is trending lower, you connect tops and go this way, all right? So shift your focus right about to here, around that 6,800 level for next week, and we're gonna see if the market can change trend officially by getting up and over. Now, 8s and 21s. There is threat here of a pinch. Remember, the pinch is the longer term signal on the daily charts that a trend is about to kick off in the other direction. Very simple, stupid indicator. I like to keep it very simple. As you know, my TA is not complicated. I don't use any types of indicators. I am a 2 moving average person and a couple of market internals such as that weighted AD, etc. And if that 8 pinches down through that 21, which it's threatening to do, you can see, like, if we don't rally next week and let's say we just go sideways and maybe a little bit lower, you're going to see the yellow line go through the blue line. That is a longer term bearish signal. If we don't get that, everything is fine. Market should move higher. But again, the trigger for that is going to be that downtrend line break. All right, let's flip over to the NDX here. Similar chart, trend line here intact. I think we went a bit deeper below the trend line in the NDX, which makes perfect sense because where was all the selling this week? It was all tech focused basically, right? We know that for a fact. There was that dichotomy between technology and everything else. So you went a little bit lower, managed to close above. Same thing here. Focus on the downtrend now, shift your focus to there. And that 821 pinch could also happen as well, but I think there's just a little bit more space there between the 8 and the 21. Now, off to the Russell here. This is where things kind of change tone a little bit because the pinch already happened before Friday. So you've got your trend line in the Russell. The break actually happened earlier in the week, which is noteworthy. I think this is literally because you had a sort of a ruling reason developing over the course of this month, relatively recently, that maybe the interest rate cut, right? This is where Powell said at the last meeting, maybe the interest rate cut is not a foregone conclusion in December, not by a long shot, right? Remember, we talked about this last week. He used very, very strong language that we don't expect to hear from him when he literally just like blew the odds of the cut out of the water. It's probably still going to happen, but the odds of it happening are not as strong as it was before. Obviously, small caps need those interest rate cuts because these are very indebted companies. Most of them aren't making money. They've got a big debt load, and so those lower rates obviously help. Once Powell gave that signal, I think that's when we started to soften, and you can see we broke trend a while ago. But most importantly, the pinch has already occurred. So I would keep this Russell on my charts if I were you. If the market starts to rally from here, see if this kind of turns around and you get the pinch in the other direction. If not, it could be something that might be detrimental to the rest of the market, right? Sometimes that weakness starts in one place and then it starts to bleed into other places. So we shall see. Okay, time now for Sector Spotlight, and if you've been paying close attention to this show thus far, you should know which sector it is going to be because it is going to be all about technology, which is of course XLK. And these stocks here are the top 10 components. We're going to get to those in a second. What I want to focus on more here is this number right here. These weights change on the S&P Global site, spglobal.com, changes every day, but officially really only once a month. I put in the new weights into my market internals, into the weighted AD, and those pretty little boxes that I showed you that show the percentage change from the open. I changed those weights once a month. October 31st, when this came out, this is like a new all-time high. I got to be honest with you, I don't think I've seen this for a while. And that essentially right there is the AI trade in a nutshell, right? This is what has got the market spooked a little bit because it is such a narrow rally and everything is all the AI trade and seemingly nothing else. And with this number going up so high, right, it exacerbates things on the way down, right? It keeps the market high as it's moving up. It kind of cuts both ways, as all leverage does, right? It's good for you when it's going in this direction, and it's just as bad for you when it's going in the other direction. So that's what you get from that 36.1%. All right, let's take a look at the chart itself of XLK. Basic uptrend. I think a little bit too deep of a retracement here than I'd like to see. So I'm going to keep a close eye on this. Again, specifically talking about this sector because, of course, it is the heaviest weight in the S&P, and what's happening right now, this is essentially the ruling reason, zeitgeist, whatever you want to call it. This is what's happening right now. Is the AI trade overly frothy? And a lot of that is playing out right here in this XLK chart. Just like we talked about in the prior charts, looking at that potential pinch, watch for it. If it happens, that's going to be negative. So that 8 coming through the 21. I'd say this downtrend line is pretty steep. I didn't draw it in, but pretty simple. Connect those two highs, and then you want to connect these two highs, kind of a more of a steep line. Usually very, very steep trend lines like that secondary, as I call it, those tend to break. You're going to want to be targeting those 821 EMAs up top if you can get through that. All right, now let's get a little bit more granular if we could. I put this graphic together, which is specifically daily snapshots, kind of zoomed in, not, you're not getting a lot of data, but kind of zoomed in snapshots of the top 9 components. If you remember from the earlier graphic when we looked at the 36.1%, That is made up, obviously, of many, many tech stocks, but you're most interested in the ones that have the heaviest weight. So I just put the top 9 here, going clockwise in that order, starting with NVIDIA, ending with Cisco. So this is actually a good exercise for everybody to do because it gives you a lot of market-generated information on what might happen. Instead of just looking at the XLK chart or just the S&P chart, you should know what's really driving the S&P. And frankly, right now, most of it is this right here. So let's just look at some of these dailies together. NVIDIA, not bad, right? I mean, you had the big move down, caught itself there, decent support with the reversal bar. Apple barely budged, literally barely budged. This is the second heaviest weight in the XLK, barely budged. Look at how flat the bars are, and the 8 EMA is going this way. It's not going that way. It's just kind of sideways. Microsoft fell down pretty heavily, but look where it is. Key 500 level support right there. So it's totally, I could totally see this moving up a bit higher, maybe moving from about 500 to 520. That's one I'm going to be looking at very, very closely next week. Let's go back over here. It looks at Avgo, aka Broadcom. Kind of looks similar to the XLK, came down a bit, big reversal bar. Palantir, similar to Microsoft, right? This is kind of at the heart of the AI trade. Look at where it came down to, this mid 160 support, 1, 2, 3, 4 candles at the exact same spot. So at a supporting area. AMD, as we know, was really strong earlier with this move up, came down just below the 21 on some support. And last but not least, these last 3, Oracle, I'd kind of stay away from that one. You can see how the trend is down and there's not much of a reversal going on. It's pretty much kind of dead money right now. Feels like IBM, very, very strong, very similar to Apple. Look at how it really hasn't budged. That 8 EMA is dead sideways. And finally, the 9th component, Cisco, also coming down. And notice how Cisco is holding above the 21 EMA. So how do you parse this information? I think mostly when I look at all of this en masse, I'm thinking either A, not that bearish, B, at support, right? C, some of them key reversal patterns that are playable to the upside. I guess key takeaway from all of this is no reason why all this stuff can't move higher into next week given these patterns. If we were looking at a lot of broken patterns, like for instance, let's just say Microsoft, for example, if we were looking at a Microsoft at 475, which had breached the key 500 level support, that would be different. If we didn't have an Apple that was going dead sideways, just sitting there, not even breaching the 8, that would be different. You know, if we were, I could go on and on. If we were talking about an IBM that wasn't dead sideways here holding the highs, that would be different, right? So keep that in mind. This is kind of an under the hood look at some of the stocks in the XLK. And to me, right now, kind of looks like we might be able to lift higher from here in a lot of these names. Time now for our number 1 draft pick. This is where I leave you with my best idea for next week, and this week's is Netflix. For a lot of reasons, but mainly due to relative strength. That's what this is all about. When I show you how this stock has been acting recently, and also keep in mind when you think about Netflix, not an AI trade really, and also not a trade that is affected by tariffs. We've seen Netflix have a lot of relative strength in the past when tariff concerns were more front and center, and I think the stock is still doing that as well. All right, let's check out the chart of Netflix here. Basic downtrend here, starting from here, coming down. The stock has been relatively weak over time, but what I'm more interested in is what is going on now, which is this section right here. Notice how the candles have completely flattened out around this 1100 level, and we know what the market has been doing this week, right? This is a week where technology has been sold off heavy, market's been down all week, and yet Netflix kind of flat into during the course of the entire week. So I found it very interesting. I was watching this very, very closely. I've been selling puts in this name as we've been coming down, which has been lucrative because the stock has been holding up so well. Let me show you another graphic here that is really going to drive this point home. This is a comparison that I made between what's going on in the QQQ daily, which as we know, these are the 5 days in question of this week, right? Red arrow, pretty much straight down, big reversal on Friday, but mostly down. And here I put together a pairs chart. You can do this on pretty much any platform, pretty easy. Just put in both symbols with a minus sign in between them. Netflix minus QQQ, right? So you can see that, and the difference of it is there trading about $493. That's the spread between the two. And here's what's noteworthy, right? Notice that, look at the trend in the Qs, straight down in the NDX, and yet if I measure it this way with Netflix minus QQQ, if I was to set up a pairs trade, look at what's been happening here over the course of those same 4 or 5 sessions to the upside, right? So that right there really drives the point home. That's the relative strength right there. So that's why I like Netflix for put sales right now, because the IV is relatively pumped. And I'm thinking of a long play here into next week, because I think this consolidation has potential to break out. If the market gets bullish again, that tight range in Netflix that I showed you when we looked at the daily chart, that's probably going to pop up to the upside. All right, I'm going to leave you with an idea here, a little bit esoteric, but this can work. This is exactly what I'm doing right now this week. You can see I was net short a lot of these puts coming into Friday, about 38 here at this 1040 strike. For next week, I've done kind of a rinse repeat trade. You can follow along at home if you like. This is what I call a broken wing butterfly, basically a net short trade. It's how I like to call it, right? Broken wing butterfly is just when you have long vertical that's about this wide, and then you got a short vertical that's bigger underneath it. You take that bottom wing of the butterfly and you break it out, and that's what gives you the credit. So you can trade all of this at a credit, long 1025s, short 1020s, and then long thousands and 990s. All of that trades at about a 50-cent credit, or at least it was today. And that should work out pretty well as Netflix holds up where it is, and then these spreads will collapse down to zero, just like they did here in the expiry that ended today, right? If you like this sort of thing and you are interested, hit the link right here in the Chiron. It's also in the description below, shadowtrader.net/options. I am live in my trading room every day for the first 2 to 3 hours of the market, calling the markets live, but also doing live trades like this with Broken Wing Butterfly and all sorts of esoteric stuff on the weekly options. All right, so I hope to see you there. Time now for looking ahead, because it is important, of course, to know what's going on in economic data and earnings, since we're in the middle of earnings season, which is tapering off a little bit. Let's just take a look ahead. I have not been putting economic data on here for a little while now. As you know, we're in the midst of a government shutdown, so a lot of that is not coming. We've got some private stuff happening, like ADP, private payrolls, University of Michigan consumer sentiment. Anything that's not coming from the government, you're still getting that data, but for the most part, data has been non-existent recently because of that shutdown. But earnings we definitely know about. Again, a little bit of a quieter week now. It's starting to taper off. All the Mag 7 is already reported. That's really what's important. A lot of the big tech names. As always, this is not a comprehensive list. You know that I only put the few companies that I'm personally interested in that I think are very tradable, maybe some high IV, et cetera, et cetera. So Monday is going to be another AI-related trade. That's CoreWeave. Tuesday is going to be Life 360 and Dillard's. I like to look at these retail earnings reports, to be honest with you, because, you know, remember, we talked a lot about these ruling reasons, and that's the other side of the coin, right? AI trade being frothy, but also labor market really soft. Is that going to translate into a weaker economy? That's what everybody kind of fears. So numbers coming out of these retailers I think are very important. Nothing on Wednesday. Thursday gives us Disney, Applied Materials. That's an important one because obviously semiconductors, Alibaba.com, Macy's, and Williams-Sonoma. So 2 big retailers as well on Thursday. And again, same reason you want to see what's going on with them. See what they're reporting, and also what the color is sort of going forward on guidance because of, you know, them worried about economic concerns or whatnot. But that is our looking ahead for next week. And that's my show for this week. Thank you so much for spending a little bit of your weekend with me. Really appreciate you being here. Hit me on the comments if you can. Tell me what you think of the new big screen as well. All right. So to recap a little bit of what we were discussing, this is a rotational market. We had markets down all week, but there was a lot of rotation. And to me, when a market does that, that probably spells that it could rally again. All right, now I want you to pay close attention to technicals in the coming week. Why? Because S&P and NASDAQ both broke their uptrend, but then they kind of caught themselves. But also because of the move down, we've left a downtrend in our wake. So you want to start connecting tops. Remember, in an uptrending market, all you do is always connect bottoms. It's probably been a long time since you had to actually connect some tops in the chart. I get it. I know what it feels like because it's been a while since we've had any type of move down. But right now, we've got to connect those tops and see if we can cross those levels. And last but not least, remember the pinch, okay? Watch your 8s and your 21s because there is potential that if we stay weak and we move a bit lower, if that 8 comes through the 21 on any of those majors, just like it already did in the Russell, remember that, my friends, is a longer term bearish signal. All right, coming at you from beautiful Los Angeles, California. As always, I wish you good trading and good night.